Hey guys, Mike here. So, oh boy, what a V-shaped recovery today after we got PPI data, which we'll go into. We also got Fed minutes, which, oh, they must have been super bullish, right? Because, boy, the market all of a sudden did a 180 when those came out. We'll go through those as well. And, of course, you have certain stocks that are breaking out, certain stocks to watch out for because they're doing the exact opposite and going into, of course, what we have tomorrow, CPI data, right? And there was not a cliffhanger today, which I'll go into as well. And, I told the members this morning starting out, it was very weird. The market stayed green even when PPI came out month over month at 0.5% versus 0.3% estimated. And then year over year came in at 2.2% versus 1.6% estimated. And you can see by the chart here, obviously, I don't think this is going to be a trend, but we'll have to, basically find out, right? Because when you look to the right here, you got final demand, and then the orange is going to be less food and energy. And when you look at that compared to what's going on to the left in the middle right there between September and March, it's a big different story, right? It's a different story. You're starting to see things come back up. You saw the same thing on CPI. And so over the last 3 months, you're starting to get this turn back up, which is the Fed's worst nightmare. But if you look all the way to the left, it's nothing like that, right? And so, again, what surprised me was the rates. Normally, something comes in hot when it comes to doing inflation, the yields will spike, and they did for like literally 1 minute, and then they sold right back off, and that was kind of fishy. And then of course we ended up opening up around, was it 10:30 something? We ended up tanking and going down before we did our V-shaped recovery. Now the minutes came out at 2 o'clock. These are the minutes from the FOMC saying what do they think they want to do and stuff. And here is your cliff notes. The majority of Fed officials saw one more rate hike increase is appropriate. Critical to keep policy sufficiently restricted to bring inflation to target, which is 2%. Officials said strike could push up inflation. I believe they're talking about the auto workers. Officials saw monetary policy working to restrain the economy as intended. Fed meeting took place before latest run-up in bond yields, so keep that in mind. And then Fed officials said they needed more data indicating abating inflation pressures. And one thing that's key on that is they met before all of a sudden you got this really big spike in the 10-year, right? And so a lot of them have come out and said recently that that is actually doing part of the job for them, which is why a lot of people think this will be the pause. They think that is actually putting more constraint in there. It's almost working as they have done another Fed rate hike or something. So again, we'll have to see. CPI comes out tomorrow. That's going to have a lot to do with it. Watch the yields when that happens. If it spikes, that means the market don't like it. They think there's probably going to end up being another rate hike. If it does not, then might be fishing out of a pause again, right? And so, something else with small businesses to watch real quick here, guys, is going to be the credit conditions, right? I mean, small business used to be the backbone of this country. Not sure if it is anymore. You would think it is. But you can see, each time you go on the .com, you go into 08, you get this pattern where it's declining, right? Which means it's making it harder. And these are the expectations, right? They're expecting here. And if they're expecting it, it means they're probably experiencing it, right? And you can see this rollover right here happening now. So we need to see how far that's going to go down. You would think if regional banks stay in a hot mess like they are, which is where most small businesses go to, then you would expect this to continue to decline. Of course, some of you actually reached out and said, yes, you own small businesses, you employ people, and it's becoming harder and harder to get credit and stuff. And other people even said they've gone bankrupt already because of that. Now, and before we continue, guys, please hit that like button there at the bottom. Give it a thumbs up. Helps people find the video. And if you like this kind of content, think about subscribing. I appreciate all you guys' support. If I ask you what was the hottest sector out there for 2023, I'm curious what you say in the comments, right? So I'll give you a second to answer that. Most people would say, as I would say, it's got to be XLK. Right, it's got to be XOK. And that's the thing about these sectors. You always got to look behind and see what is making them up. What's the working parts, right? Well, it's either today or yesterday where this happened. But the hottest sector of 2023, the best performing, is actually the communication services sector. XLC, as you can see, almost 3% higher. Now, you look at it and go, wow, what the heck? And you compare that to energy and consumer discretionary and things like that. Obviously, it's not even close. So, you look at that and I was like, wow, what's in XLC for crying out loud? What's going on over there? And this is why you got to look behind what's controlling this. Like if S&P goes up, look behind what's making this move up. Look at this right here. Top 10 holdings, almost 50% of it is Meta and Google Class A, and I believe that's B shares or C shares. And so basically those three, 50%. Well, what's Google and Meta been doing this year? Oh, they're up. Meta's up 250% for the year. I forgot what Google's up, but it's been on a crazy run too, right? And so, and then you look at the rest of those, which have hardly, any weight and compare to those, and it's T-Mobile, Comcast. I mean, look, even Walt Disney's in the top 10, and we know that thing is down dramatically. But a lot of these, believe it or not, when I looked them up, they have done much better than you probably think. Like Charter has actually been doing really well. Comcast, I mean, you would think, like, really? I don't know about Comcast, but Charter for sure. I looked that one up. And some of these others, and you're like, really? They've been doing good? But, oh, yeah, they haven't been doing bad. But behind, underneath the hood, it's just those three stocks that have absolutely skewed this, right? And another thing to look at too is the Dow. Like the Dow has just been very quiet. I normally don't track the Dow, but I'll put it on here for you anyway, right? And you can see it's got this bounce off this trend line where it was resistance. Now it's support. You bring in the moving averages. It's sitting there right at its 200 right now as we look at it. And so, it's got to get above that 200. But again, when you look at it, what's really happening here? Well, it looks like a nice bullish channel, because what you have going on in 2023 is that low right there didn't take out that low, didn't take out that low, right? So you're still having higher lows, right? And then you look at the highs, right? This high right here was taken out by this high. And so it's in this channel just nice and quietly just moving up, going from top to bottom. And so pay attention to the Dow, but also so there wasn't a cliffhanger, right? Well, here's the SPY. There's that neckline of the inverse, or the head and shoulders, and it actually closed above it today. It actually almost gave us a cliffhanger because it dropped midday and went below it again, but it closed out above it today. Now, when you look at it, I mean, 433 is a really good support for this one, right? That is a V-shaped recovery if you've ever seen one. What did we talk about a few days ago? Watch for the V-shaped recoveries in these stocks and these indexes, right? The Qs, what does this one do? That October trend line closed below it yesterday, closed above it today. It still is in this short-term downward channel, but you can see, what do you see? That is a V-shaped recovery. Once again, the dips continue to get bought up. And you can see with this one, 360, between 368 369 is a good support level for right now. So again, a lot of this will depend on CPI tomorrow and how the market wants to react. Resistance is 371. 1, 2, 3, 4 times, 371.20, somewhere in there. It's a good resistance. Now, Tesla, you can see it's still just simply wedging itself in. It's pretty much just really flat for the day more than anything else. But when you look at this, it's still in this channel. Until proven otherwise, this channel's been good, going on like 3 weeks now. So again, do we move straight up here, going towards the trend line, continue this march up? Again, once it breaks over that, it's going to head to 274, I think pretty fast. But again, we'll just wait and see. Now, looking at the global deliveries, every time I find a little nugget, I'll feed it to you when it comes to Tesla, right? And they had promised or talked about in 2020 a 50% compound annual growth on their deliveries. And so far, they're good. I mean, if you look at the numbers inside the little white bars there, they're already ahead of schedule this year. And so when you can do the math yourself on this one. And so they still got 1 quarter to go. So that's still staying intact. So again, in most markets, they are number one or going to end up becoming number one. So, and they're a mile ahead of a lot of the competition. Now, Google, it was one of the strongest ones of the day. We talked about this yesterday. We talked about it pretty much every day, right? And a lot of AI hype on this one. But again, another green day. And I said, once it gets up to, what was that, 140-ish, 141, whatever it was, right up there in that volume gap, it was going to move fast. It did. That's where it got rejected. Again, it needs to take out that high over there around 142, it looks like. If it can get above that, it'll continue to move. The one thing I like about Google, and like a lot of the rest of these, all it's doing is just stepping its way up, right? It's not leaving gaps behind. It's just stepping, just like this right here. Stepping on up, stepping on up. And when you look at the volume down there, now does that mean it can't pull back? And I would think it'd be a healthy move to pull back down to that trend line and go ahead and anchor it as a support. But when you look at the dips, and you see the volume bars right here on the hourly, I mean, they are being bought up, right? That is a lot of volume coming in right there, those spikes. And so, I think that's big money moving in. That's what's pushing us up because, again, we're retail. We can't push this stuff up. Now, when it comes to NVDA, obviously I had this breakout right here, so we're just going to get rid of that right there. 4 days of green since, and whenever you don't think it can go any higher, it just keeps on moving higher and higher. Any dip in it just continually gets bought up. And, you can see once it has that little cup formation, it starts moving, man. It's like a juggernaut. And all it does is keep going through these previous highs, right? One after the other. So when it gets above this one, it's going to end up closing the rest of that gap right there. Then it'll go into another volume gap. So again, if they want to keep pushing this up, they can. What's helping this one continue to push up over and over is it was the #1 in bullish flow. NVIDIA was green today, Amazon green today, Meta green today, Microsoft green today, Google. And so again, options do help. So another thing that helps is also getting price upgrades, right? They end up getting an upgrade from 600 to 700. Might see a few more of these come in because remember, they don't report till like November. So they got a while before earnings. Now, just for the fun of it, I showed you guys this probably a month ago. And this is Wyckoff's distribution. I don't know if it's you guys or the members video I did, but I know I showed us a group of people. And when you look at this, to me, it looks like Wyckoff's distribution, right? Which means you should get a massive sell-off. And again, I go through this. You can see the points. Don't worry about all the details of what Wyckoff distribution is. Just worry about the pattern. But the update is, if you look at this and I draw some lines, again, it's not going to be perfect. There's basically, I'll just say peak, all right? There's one of your peaks, right? And you start drawing down, you go, okay, there's your ST. Then you move over. This should be your top right here, right? Your UT, that's phase B. Then it starts to sell off, and then all of a sudden we start to get this recovery up here, right? So this should be maybe in line with where we're at now. And so, maybe one more peak up, and then we should start to sell, which could take, a couple of weeks at least, right? Maybe even 3 or 4 weeks. But I'm just curious to get your input on that. I mean, it looks pretty dang similar to Wyckoff's distribution, and we know there's that huge gap right down below. But again, it's NVIDIA, and I can't imagine, unless something goes terribly wrong. But again, I saw that and I was like, well, it looks like it. And it would be the first stock to play out like that. So I always like to at least bring it to your attention. Now, Microsoft, little pop today, little breakout right here. We talked about that one. And you can see, the momentum is shifted in this one, right? You're about to get above that 0 line on your MACD. You're above the 50 on the RSI. So momentum is in Microsoft's favor. And again, that's all-time highs to the left, folks. So it's not very far off. Now, Meta, again, another strong day, 327, 328, again, is resistance. I'm going to keep that trend line in place just in case we come back down to try to bounce from it, and it all of a sudden becomes support. We've seen that happen multiple times just this week alone. But again, this is a strong name. And again, to the left, all-time highs. So if it pushes up above that, the air is thin, the resistance, not much there, and you can see it's only 15% off all-time highs. And just look at that move. 251% in 252 days, so basically averaging 1% a day for a mega cap stock. I mean, that is just unbelievable, isn't it? Oh, you could almost call that a cup and handle, couldn't you? If you really draw something out there on that one. But I mean, yeah, again, a lot of big hedge funds are moving into that one. And whether that continues, we'll see tomorrow. But when you look at Alibaba, again, talk about this in a few days, you get your stimulus coming out of China, and really what you're seeing is it's just sitting at the top of that channel now, right? It moved up to the top of that channel. So again, in this declining wedge right here, which normally you'll see it move and pop out, and again, it can. That's the way BABA moves. And you see, getting a bullish MACD cross, the momentum started to somewhat pick up, moved over or right at the 50 line for the RSI. So this one can move. Just pay close attention. I pay more attention when the MACD gets above that 0 line. And again, this is the volume profile we're looking at, right? So there's a lot of resistance there, but if it gets above that, because the way it moves so fast up and down over the last year, not a ton of resistance. Now, Netflix, watch this one's interesting because like I was telling members, I wouldn't worry about it until it gets below the 200. Well, it's below the 200 today. It's one of those few mega caps that absolutely, for some reason, is losing steam. I think it might have to do with the fact that some news came out saying that Google was actually beating it when it comes to teens. As you can see here, YouTube surpasses Netflix as top video platform for teens. And as we scroll down a little bit, this is a survey. You see the research shows teens now spend 29% of their daily video time on YouTube. And I can tell you, my son, he's 8 and his friends are 9 and 10, and they're obsessed with YouTube. Like, I got to kick them off of it, for God's sakes. But I mean, so they are obsessed with it, and I've never heard one of them utter Netflix. And this is important because obviously, if you're trying to grow your business, what do you got to do? You got to keep getting that younger generation that's coming along, especially in this kind of business, to start buying into your content and stuff. So YouTube has done a good job of capturing that, and so Netflix has not. So I don't know if it's that. I couldn't find any other news that would be pushing it down. Let me know in the comments if you found something, but that would make a little more sense to me. And don't forget, they're reporting Wednesday of next week. I think they're the first mega cap to actually report, if I'm not mistaken. So, let's see if the weakness continues or not. Now, when it comes to earnings, you will have some tomorrow, right? You're going to have Delta. So we're going to see how that one works out. Domino's, Fastenal will be another one people like to look at. And then, of course, Friday is going to be your big day. Now, of course, all that matters is 8:30 in the morning. You're going to end up getting continuous jobless claims, core inflation rate month over month, core inflation rate year over year, CPI, inflation rate month over month, inflation rate year over year. And you can see they're expecting a decrease in regular inflation, and core is expecting a 0.2% decrease in year over year, and the monthly to stay the same. Then you're going to end up getting initial jobless claims, as well as a whole bunch of stuff going on, which won't even matter when it comes to oil and things like that. And so, with job data and CPI, it's going to be a very fun morning, a very volatile day tomorrow. And you might just see, I can't imagine PPI coming in hot and CPI not. It's just about how the market wants to digest it, right? And so that's what we're going to have to see. And don't forget, they're also going to set us up for earnings on Friday, where we have bank earnings, which have been a hot mess. But don't forget, with earnings, guys, we've talked this on Saturday video. I've showed it to you. You've talked about it amongst yourselves. Earnings can be manipulated 10 ways from Sunday, okay, in a very legal way, right? Pulling forward this, delaying this, and don't forget all those big mega caps that are converting those dollars or foreign currencies back into dollars. They'll lose on that end of it this quarter coming up. But don't also forget, I've showed you on the interest revenue they made. Some of them have doubled their interest revenue. They're making a killing on these higher rates because they have so much cash on hand, right? And so, keep that in mind as well. And then you got companies like Apple who, like, whatever, we're not giving guidance. It is what it is. And you saw Pepsi the other day. I told the members, they raised guidance. I don't think anybody expected that one, but they sure did. And it was like, okay, then. I guess we'll have to see. So it's going to be an interesting earnings season, to say the least. But, right now you just get the feeling that the market, you would think it wants to do one more push down before going up. But either way, the next 8 to 10 weeks, you just think this thing wants to start to push up. And again, that's why the seasonality exists for a reason. And so we'll see if it takes this week, next week, the week after. But, give me your thoughts on the bottom, the comments and stuff. Let me know what you think is going to happen. Let's say for the next 10 weeks, what do you think is going to happen and stuff. So anyway, just be nimble and quick, and we'll talk about it tomorrow. So please hit that like and subscribe button, guys. Really appreciate it. And let's see what tomorrow brings.